let me just give a last little caveat of that man of mind. There was a lot of negative talks about the consequences of some of these things and the worst case scenarios, and it kind of went around the room. And I was the last one to speak in our group, and I said, "Look, I'm going to take a slightly more optimistic view, guys, because we deal with construction, we deal with development, we deal with planning. Legislation is just is a ubiquitous fact of dealing in the property space. Yes, they're going to keep over legislating. Yes, we're all aware that they are institutionalizing the market, which favors scale. So you have to have a growth and scale mindset on it. If you're thinking to just passively manage a portfolio or try and keep it where it's at, then the likelihood is you're going to get margin eroded over time. And everyone kind of agrees with that. That obviously it's institutionalizing. Obviously, you need scale. So you need to kind of have a slightly optimistic lens on the basis that we're going to go for a few years of messing around where tenants are going to use chat gpt and figure out legislation. It's going to be far and few between because a lot of them, they're not there to go and try and get free rent. They're there because they're working in an area or because they need that as a utility. Like that's going to be the balance of people are going to be thinking about it like that. So as long as we keep offering a good service, remain compliant, and stay optimistic that the free market will stabilize, because people, there's going to be a mass exodus of private landlords, and as that happens, demand and rents are going to go up, and people are going to not mess around on the basis that they won't be able to find somewhere if they build a reputation as a tenant that messes around. And we have to just have an optimistic view. And hopefully, we see some of this legislation repealed under a new government, but that's not something we should bank our bets on. And that's kind of the consensus, really, is what can we really do about it other than try and lobby the government? But it's the institutionalizing of the market that's happening, which comes from the big boys. So we have to play the game, and that's the way around it. But big shout out to Van Vogstad for putting it on because it was a really good event.
Yeah, Van's an absolute beast. His background was actually in building like a betting platform, and he sold out of that and then moved into real estate. I was just going to touch on one thing that I thought might be useful for everyone. Really, when we were growing our HMO business, which is still growing, but in the early days, we took on quite a few rent to rent properties where we rent a three-bedroom house, convert the dining space into a fourth bedroom, and in Oxfordshire, you don't actually need a license if you're four and under tenants. I think we took on about a dozen very quickly, and that enabled us to make about 300 to 600 net per property, depending on the month, the heating, and the tenancy. And were really helpful for our scale because we could literally walk in that house and have it let a month later. With the renters reform and how the sort of benefit of flexibility and the benefit of rights to stay, and now where our business is more mature, we've got more of our own bedrooms, we've got a lot more revenue that we have as our own bedrooms. We've actually started dishing them back into the market, back to the landlords, because they served a purpose. They're what I found really frustrating about working with someone else's property is you'd be like, if you did that ensuite, would get extra room rates and it would just add value to the property, and the landlord would be like, nah, I don't want to spend money. And then you just carry on letting that room just not being that great. And with the Renters Reform Act, we've actually been cutting all of our rents completely back down to take back control to only be managing our own stock for a number of
Mhm.
reasons. We can call the shots to take tenants to court if we need to. We can add value or renovate properties where we need to. So because of that change, we've felt that rent to rents have become a lot more risky, because at the end of the day, we're signing a contract for 5 years. At the end of that 5 years, if that building's not vacant, what do you do? And it's more difficult to
Mm.
get tenants out. So we've proactively been cutting our rents back into the market space. We only have a couple left now, and probably by this time next year we'll have zero. And that's an intentional growth strategy that we adopted to build cash flows. That sort of funded our staff overheads.
The early
Our,
years, yeah.
our staff member that was managing our own stock was actually getting paid by these rents. Um, and it's a bit painful because we did some work on some of them. We redecorated a lot of them. We had to furnish all of them, and all of that upfront cost obviously is time and effort and money. But we look at that capital reinvestment and what it's created, enabled our team to grow. And actually, while we've then grown on stuff that we have on our own balance sheet, full control, even including the blocks that we manage in XP, I'm technically managing agent and landlord, and it's so much easier managing stock
Mhm.
when it's your own. It's a nightmare
That's a very good point, Jack.
when you're trying to convince someone to be, put up that wall and you'll get extra rent, do this and you'll get extra rent, landscape the garden. They're just like, nah. You realise how tight landlords are when you manage properties.
You can reuse the furniture though, right? You can move it from some of those properties into the ones that you finish and own, and yeah, there's a bit of a lag, but
And you got to pay them out. Jack's answer is to buy them out.
We've got a 30-foot container and two garages that are just
Don't move
full.
them in that, mate. That's definitely frowned upon. Don't move them in the 30-foot container. But you are right. Putting the renters reform is going to put the rent to rent strategy completely to death. It's going to put it to bed because you can't really run that strategy, like you said. You are signing lease and contract agreements, and yet you can't move them out.
so there's one guy who was there at the Mannermind session, and has a lot of rent to rents in London, but like they lease the building, and like it's more commercial than like just rent to rent houses. Like they're buildings that he takes on, and he's pivoted. He's now in the process of pivoting his strategy from rent to rent private to rent supported living, where obviously you do have a lot more guarantees on
That's
the
contract to contract.
revenues.
That's what I mean. It's different
Yeah,
to
yeah, yeah. It's
rent to
different.
rent to the AST market is no longer going to be there because
Yeah,
how can you
agreed.
sign a contract and then you can't have any control out of the people you're giving ASTs to? It sort of doesn't make sense because the homeowner didn't sign the AST.
Yeah, rent to rent is quite messy.
Let's be real though. Like since the start of this podcast, how often have we mentioned that rent to rents are risky and that they don't have longevity? And you see all these training gurus who've been selling rent to rents, selling rent to rents, like, oh, it's a great way to make cash flow. And now one legislation comes in, and as we've kind of predicted over the course of this podcast, now it becomes unviable because it's way too risky.